Hey, how's it going? It's Rocky. Happy Monday. It is what is today? Today is August 12th. It's currently 1:30 p.m. in the Pacific Coast, and I just thought I'd restart this playlist that I used to have where I used to run through my trades after the market close. And I guess I'm also doing this because should Apex ever question my trades, then I can just send them this way. But really, I wanted to do this just to run through my thoughts and hopefully it'll help others out in the way they're trading. What I have up here is ThinkorSwim. So I do all my analysis on ThinkorSwim, and then I do my actual execution on another screen. So this is one screen I have, and then the second screen that I have is this one right here. So on this screen, you can see NinjaTrader. This is where I have my live account, and then I have 2 PAs and currently going through 5 evaluation accounts. So it's a little tough going back and forth right now with doing my analysis in ThinkorSwim and then executing on NinjaTrader. But NinjaTrader has the trade copier that I'm using, which is helpful for multiple funding firms or prop firms that are needed, and also the margin for a live account is a lot cheaper for NinjaTrader, because for one E-mini would cost me about $500. One micro, that would be $50. However, if we switch to the ThinkorSwim, and let me see if I can zoom in. Oop, not quite that one. Bear with me. Okay, so for ThinkorSwim, if we click on this, and you'll see the value. So one E-mini would actually cost you $15,631. And that's to trade even just during the day. Just day trading it would cost you $15,000. So that's a lot. When I first started trading through YM, it was about $8,800. But because YM has increased a lot, volatility has increased a lot, so it's a lot more expensive to trade on ThinkorSwim. So that's why I'm trading on NinjaTrader at the moment. And before we get started, I blabbed too much a little bit there. Just a quick disclaimer. This is for informational and entertainment purposes only and should not be relied upon as a basis for investment decisions. So what I wanted to do is sort of give you the thoughts on how the day went for today. Today was Monday. I had thought that I was going to increase the number of contracts that I've been trading. But after seeing what I saw here, I'm going to zoom in on the time-based chart. I'm going to switch this a little bit. See, on this time-based chart, it got pretty tricky. I don't trade the US Open, and if you look at, oops, that's a little too big. Bear with me. Let's make that smaller. So this is when the US Open. So this candle, and then followed by the second one, and the progression of all of these, if you look at the length of it, so this first candle had a range of 125 points, and then the next one was 108 points. And then if you look about a little over an hour later, this one candle right here, that had a range of, had a range of 166 points. So to me, that's pretty volatile. And with the small account that I'm trading, I knew that I could not trade the E-mini because it would just blow up my account just like that from a 5-minute candle. And that's the reason why I am trading micros right now, until either I have a whole lot bigger buffer or something worse, or not worse, something that a lot more buffer is okay. That's why I don't do live. Anyway, what I was trying to say is I'm gonna stick with the micros while the volatility is really high, and when I have more buffer, then I will size up the number of contracts that I will trade. So that's been a issue I had in the past where I forced myself to trade the E-mini when I knew I didn't have a lot of drawdown, but this time around I'm trading with the micros. So I guess the main reason that I wanted to do the content today is just to run through my best trade of the day, but or at least that's my goal, do either the best trade of the day or the worst trade of the day. But the one trade that I want to talk about today is the fact that, okay, I'm going to zoom out. I actually did a total of 4 trades today, all long positions. And you're probably wondering, why are you counter trend trading? Well, that's just what the chart was showing me, and that's why I traded that way. All of them were profitable, all 4 of those trades. but it's this last one that I sort of want to run. Oh, I'm gonna run through my last trade because it's a trade that could have taken away all my profits for today, which is kind of sad. Let me actually, I'm gonna take out my camera here. I thought, I could relate more if I show my camera, but it's blocking some of the important parts of this chart. So I just want to point out, when I normally trade, if you've watched my previous videos before, when I go long, this is what I look at. So on the stochastic RSI, I'm on the time base. I go long when I'm on the overbought side, as you can see right there. And then another long position right here, the second one, a little close to the overbought side. And then on the third side, I am on the overbought. So it's this fourth trade that I forced it. So that's the one I'm going to focus a little bit. As you can see on the stochastic RSI, we were not on the overbought side, and that's not an ideal entry for me. And I'm going to look at the right side on the tick base. And I'm going through this because this is the system that works for me. So if you have another system that works for you, use that. But I'm just showing what works for me, and if you needed like a way to pretty much, I don't want to say copy trade, but if you needed a system to start with, you can start with this, and then use your favorite indicators or whatever you need to be able to improve. So on this first trade here, you can see I waited until I was overbought before I went long. On the second one, it was close to there, so same as what you were seeing right here. On the third one, it was there also. And on the fourth trade, this is the one that almost got me in trouble, because something about trading recently is, especially in this market, if it pops up too quickly, avoid it, because it is quite dangerous. And let me show you exactly what I mean by that. Alright, let me get rid of those marks. I am going to zoom to that one trade that could have taken away all my profit for today, which would have been sad. And it was actually my longest trade. You can see here, time based on the left, tick based on the right. May not be able to see this blue line very well, so let me just draw a line here. So it was this candle that I entered at. So on this 5-minute candle, this was the 12:10 p.m. Pacific Coast candle. And then the corresponding candle on the right side, it was this candle right here. And what fooled me about this one is, on this one, you can see how high this wick is. So essentially, I saw that momentum of it going up so quickly, and that's the reason why I entered. Because when I entered, and again, the range of this one is 41 points. When I entered here at 39,467, it was a good move because on the stochastic RSI, which I'm going to circle here, I was on the overbought side at that time. But if you look here, it's not on the overbought in the middle, because that it's a lagging indicator, right? And on the right side, this, if you look at this one right here, that jerk up is what fooled me on this one. But what was on this position, I was long 4 contracts on the micro. For the evals, I'm trading 1 E-mini, but for the micro, for my live funded account and my self-funded account, I am trading with 4 micros. So this white line that you see right here, I'm just going to draw a blue line so it's easier to see. This was my break-even line. And you can see this awful drawdown that had to go through. And this is the importance of having a max risk when you're trading. So my max risk is about 100 points. So it's about right here. That was my max risk. And then you can see that even though I was in a drawdown, and yes, I was nervous, I knew I was willing to lose, or max risk, right, the 100 points. And this is something that you have to do with trading sometimes. It's like, sure, you can exit before this max risk, but having a predetermined amount will at least calm you down a little bit more. So if you lose, well, you lose. That's how it is, right? Be a better loser. But you need to give your trade a chance to see if your trade theory is right. And as you can see from this one, we did go above that entry right here. So I was profitable. But I want to say this was my worst trade of the day because of the fact that I was fooled by this little jerk right here that I thought was momentum. So I should have been more patient. And the tough part about this one is right when it went above, just because I've been in a drawdown for almost an hour, I took a break even win when I could have waited and gotten 50 more points. So that's why I'm saying it's the worst trade of the day that I've made, even though it was break even trade, is because of my inability to hold on a little longer after being in a drawdown. But the one nugget I want to really emphasize here is max risk. It's so important. It's what usually failed me in the past, and it's something that you should really pay attention to improve your trading. Is pretty much listening and staying true to your max risk. Anyway, that is my little rant trade analysis for today. I will do my best to make this a little better in the next future content. I need to get my system down a little bit and really focus on what I'm trying to share, because I want to be able to give a good value to everybody where listening to this could be quite helpful. Anyway, give me some feedback. I haven't done this in a few months, but I want to continue doing this, enter the US market just to go through either my best trade or my worst trade of the day. All right, thank you all for tuning in. I will catch you on the next one. Have a good one.